the global race to cut carbon and secure reliable energy, uranium is reclaiming center stage, and one company may be leading this quiet revolution. Uranium Energy Corp, ticker symbol UEC, is not just another name in the uranium space. It could be the hidden gem in the next nuclear boom. While headlines are dominated by flashy tech stocks or fossil fuel plays, UEC is steadily building a fortress of US-based uranium assets, maintaining a debt-free balance sheet, and holding a stockpile primed for price spikes. This isn't just about clean energy, it's about seizing a strategic advantage in an increasingly unstable global market. If you're on the hunt for under-the-radar energy plays with 10x potential, hit that subscribe button now, because what we're about to uncover might just change how you build your uranium watch list. Nuclear power is experiencing a powerful resurgence as countries aim to decarbonize without compromising energy reliability. Globally, nuclear already accounts for nearly 10% of electricity generation and roughly 18.6% in the US, a figure likely to grow as nations extend plant licenses and restart stalled projects. What's driving the urgency? A massive imbalance in the uranium market. While global demand sits between 180 to 200 million pounds annually, supply is stuck around 140 million pounds. With nations targeting a tripling of nuclear capacity by 2050, this gap is set to widen. The result, a structural deficit that favors well-positioned uranium producers. In this high-stakes environment, uranium isn't just a commodity, it's a linchpin in both energy security and the fight against climate change. And few companies are as strategically positioned as Uranium Energy Corp. UEC differentiates itself through a rare combination of unhedged exposure, operational efficiency, and geographic advantage. While many peers hedge uranium at fixed prices, UEC holds one of the largest unhedged inventories, over 1.4 million pounds of UTO valued at $125 million as of mid-2024. This allows full upside participation as prices rise. Its mining operations rely on in-situ recovery, a cost-effective and environmentally gentler method deployed across Texas and Wyoming. With ISR, uranium is extracted directly from underground aquifers, minimizing surface disruption. UEC's facilities, like the Irigaray and Christensen Ranch hubs, have combined licensed capacity for 6 to 6.5 million pounds per year, at competitive costs of $20 to $25 per pound. A major turning point was the 2021 acquisition of Uranium One Americas. This $112 million deal doubled UEC's U.S. production capacity, adding fully built, permitted infrastructure and over 40 million pounds of uranium resources to its portfolio. The Irigaray processing plant and active well fields are now key components of UEC's switch-on strategy, ready to produce assets that require minimal startup time when market conditions align. UEC isn't just strategically positioned, it's financially fortified. As of early 2025, the company had around $214 million in cash, physical uranium, and equity holdings. Just as important, it carries no debt. This liquidity gives UEC flexibility to pursue acquisitions, fund development, or capitalize on short-term opportunities without balance sheet stress. Its uranium stockpile, among the largest in the US, includes over 1.35 million pounds in physical inventory, plus rights to acquire an additional 300,000 pounds at historic prices. With uranium now trading above $75 per pound, these holdings could represent major upside. Unlike peers still caught in permitting purgatory, UEC's ISR mines and processing plants are fully licensed and production-ready. This infrastructure gives it a critical advantage in a market where time to market often determines profitability. When uranium prices jump, UEC can act immediately. Uranium is quickly moving beyond energy and into the realm of national security. In 2024, the US government banned imports of Russian low-enriched uranium, unlocking billions in subsidies for domestic suppliers. UEC, with assets fully located in the US, is ideally positioned to benefit from this policy shift. That same year, the Department of Energy awarded uranium contracts to 6 producers, including UEC. The company delivered 300,000 pounds to the DOE at $59.50 per pound, earning $17.85 million, and validating its credibility as a reliable supplier. Further strengthening its strategic footprint, UEC signed an MOU with Radiant Industries to support portable microreactor programs, small next-gen nuclear systems for defense and space applications. And with plans underway to establish a U.S. strategic uranium reserve, UEC is one of the few companies already positioned to deliver on bulk contracts. UEC's rise isn't accidental. It's built on calculated strategic moves. The Uranium One Americas deal gave it immediate scale in Wyoming, but the company has continued expanding. It holds a 65.5% stake in Canada's Christie Lake project in the high-grade Athabasca Basin and is developing the Alto Paraná project in Paraguay, diversifying exposure across key global uranium belts. These projects offer long-term optionality, while UEC continues building near-term production strength in the U.S. By combining high-grade exploration assets with turnkey ISR infrastructure, UEC is crafting a dual-pronged approach: near-term cash flow and long-term upside. The uranium market is already seeing renewed investor interest, with spot prices rising above $75 per pound. UEC, with its large unhedged inventory, stands to benefit more than most. Every dollar increase in uranium prices feeds directly into the company's valuation. Political momentum is also building, with the U.S. pushing for energy independence and nuclear policy favoring domestic sourcing. UEC sits at the center of institutional and government support. From ETFs to DOE contracts, the signals are all aligned. Meanwhile, its infrastructure advantage is hard to beat. UEC isn't waiting years for regulatory clearance. It's ready now. If demand spikes and supply remains tight, few companies will be able to respond as quickly or as profitably. Of course, no stock is without risk, and uranium is one of the most volatile commodity markets. Spot prices can swing rapidly, driven by geopolitics, environmental policy, or public perception. UEC's unhedged model, while high upside, is also high risk in downturns. Permitting timelines, even for expansion, can be lengthy. And while UEC is well capitalized, it has yet to generate consistent revenue from uranium production. Its current strategy hinges on asset appreciation and near-future monetization. Investors should also consider macro uncertainties, such as future trade tensions, regulatory shifts, or delays in nuclear project timelines. Patience and risk tolerance are essential. Uranium Energy Corp checks many boxes: US-based, debt-free, production-ready, and fully exposed to uranium's upside. Its clean balance sheet, ISR infrastructure, unhedged strategy, and alignment with U.S. energy policy make it one of the most compelling uranium plays available today. But the uranium space is not for the faint of heart. Volatility, delays, and policy risks persist. Still, for investors looking to position ahead of a long-term nuclear revival, UEC offers a high-leverage, high-potential setup. So the question remains, is UEC the dark horse of the uranium bull run, or a speculative play in a volatile sector? Let us know what you think in the comments. Are you betting on nuclear energy in 2025? And is UEC on your watch list? Thanks for watching Stocks Telegraph, where we spotlight tomorrow's breakout stories today. Don't forget to like, subscribe, and hit the bell so you never miss the next big reveal. Stay sharp and happy investing.